Alright, we're good to go. Alright, so for those of you that might be new, great, awesome, Vinay, that's good to hear. Today was it looked kind of rough, to be honest with you. I got all my trading done in the morning, thankfully, but like well before the open. Oh, okay, got you. Yeah, I was gonna say today's trading day looked a bit rough. It was a wicked wick. Good stuff, Jerry. Good stuff. All right, great. So I think all of you guys have been here for this backtest, but for anyone that might not be aware or they're new to the backtest sessions, basically what we do here is we backtest the models that you guys are watching on our live streams. The model that we've been testing most recently is the Q3 inverse fair value gap nested with the root candles, hence Kingline Q3 root candles. So all the rules that we've tested are right here. We're essentially looking for an inverse fair value gap in late Q2, which we've defined as the last 11 minutes, through early Q4, which we've defined as the first 11 minutes. And we're looking for this inverse fair value gap specifically after the 9:53 and 10:34 root candles have printed. We are using the root candles to add confluence to the entry or as a target, and we're placing our stop loss at the swing high or swing low above or below that fair value gap with that 9:53 and 10:34 root candle. We are moving our stop loss to break even at 1R, and we're taking a partial if possible, assuming that most of us are more than likely trading with multiple contracts. Then we simply take profit at a root candle or any other time-based level that we already use as a group, anything that's kind of already in that quarterly cycle indicator. So true macro session open, New York open, which is 7:30 a.m. Eastern Standard Time, true day open, which is midnight Eastern Standard Time, weekly open, which is 6 p.m. Sunday, or the 90-minute cycle high or low. And we're aiming for at least 1R. The rule so far is that we don't take a trade if TMSO is closer than the target, and we're closing a trade if an opposing inverse fair value gap occurs. So we are not doing any back testing today specifically. We are going to go through the data that we've back tested so far. For a quick glance of what this model looks like, I'll just pull up the first winning trade. So again, we're simply waiting for an inverse fair value gap to occur from late Q2 to early Q4. That inversion occurs right here, and this is in this example, this was actually before 9:53 printed, I believe, or I don't have it marked out. Oh, sorry, I missed it. It's 9:53 right there, and the inversion is simply right above that. So first a fair value gap prints, and then as price comes down, we close through that fair value gap, inversing it here, and we enter on this candle right here, and we've placed our stop loss at the swing high above that, and we are targeting the first time-based level. So this is a root candle 658. That was likely not a 1R target, so we extended that target down to New York open, which is 7:30 a.m. And this is essentially what the model looks like. It's pretty straightforward. Now, how we backtest the model will always be slightly different from how it's traded live, from what you guys are seeing through JD, and that's simply because I'm making everything as mechanical as possible, and I really like to start backtests with stripping a model down to its core and using testing it with its very simplistic existence, if that makes sense. So for example, we have a time-based level, or we have a time-based element, we have a price-based element with the stop loss being at the swing higher to swing low and using that inverse, and then we have the time-based element of when to take this trade exactly between Q2 to Q4, and specifically when 9:53 and 10:34 root candles have printed. And then we've just applied a simple risk management tactic to that, right? So these are just 3 basic things and these couple of rules, and so far with just these very basic rules, we are hitting a strike rate of 40% of the trades will get a full reward for one risk that's put on, and then an additional 20% of those trades you will at least take a partial from those trades, and you will not have any money on the table because we've also trailed our stops to BE at that point. So overall, 60% win rate. Over the last couple of days that we tested this, maybe, so 1, 2, 3 days of data. Yeah, 3 days of data, maybe even 4 days of data. We've hit a crazy losing streak. So that's even considering this losing streak, we're still hitting a 60% win rate. So I think that's honestly pretty solid to start out. But basically, we'll go through all of this together and see how we can refine it. The very first thing that I want to take a look at is how many of the trades we close, specifically because of that inverse fair value gap against us, because that's one of the rules that we applied very early on through the first couple of reps that we started to see. We applied that rule, and this is something that JD does live. It's something I've done live. Tyrant has also done it live. And the basis behind this rule is simply that, you know, if an inverse is occurring and it's during this time frame of Q2 to late Q4, then that basically means that we have another opportunity to hop into another trade, right? So instead of holding this loser, we take profit if possible, or we close this trade out altogether, and we're able to hop into the very next opportunity that's occurring, right? So that's really the only thing that's behind it, and it's a very simple rule, again, that we've all applied. So that's the main reason. No trade if TMSO is closer than target. This is something that we learned in one of our previous back tests. So okay, so looking at the reps here, I'm just gonna scroll all the way down, and I'm going to scroll all the way to the right. Does anyone have any questions before I kind of lose myself in the data here? Because I'm going to be pretty zoned in on looking through all of this. Does anyone have any questions before I do that? Okay, sweet. All right, so I'm going to look at everything that says that we close on the inverse against us. And I'll just widen this out a little bit so you guys can see. Okay, I already see one. Let me scroll all the way down. I think this is the losing streak that we came across. This I think is going to be the next rule that we have to apply, where we're not taking any trades if there are several nested inverse fair value gaps. But of course, we would have to apply that rule in hindsight as well to see if that also removes profit from the table. All right, manual stop out at inverse fair value gap against us. Okay, so that trade was BE. Let's take a look at that really quick. This is the annoying thing about, hold on, let me see if I can do this. There we go. Okay, so essentially what I'm showing here, the reason I let price play out is to see what would happen if we kept that trade open instead of closing that inverse against us. So we have this inverse closing against us here, and we technically closed the trade right there for the data. But I printed the data after that to show that it would have been a full stop out anyway. Okay, so let me take notes here on my end. So that's one trade in which that rule applies very well. And what I'm doing here is I basically just have a sheet in front of me, and I'm putting a W on one side and an L on one side, right? And I'm basically taking a simple tally of how many trades we would have lost or we would have won had we held that trade past that inversion. So that's one trade that we lost basically. And when I say lost, it means we would have gotten a full stop out. All right, so that fair value gap occurs. And this is I should maybe add a reason for close. Half stop with inverse fair value gap. Let me open this to see what I'm talking about. Okay, wait. We are going short here. And then we close above it. Okay, this inversion right here. Okay, so I didn't print the data past this. I'm gonna bring this up really quick on TradingView if I can. October 22nd at 11:15 a.m. So let's see first if the data is available on continuous. October 22nd. Will it? It is not. No problem. We just type in the old contract, NQZ probably. Wait, this is October, HMU, probably U. Probably Z. 2024. And you just press enter and it'll bring up that contract. And I will simply go back to that date. Go down to 11:15 a.m. Oh, it doesn't give it to us here neither. Let me try U, and then if not, I'll pull it up on FX Replay. And this is September. All right, give me one moment here to pull up FX Replay. And let's see if we have it on here already. October 22nd, 11:15 a.m. Here we are. Okay. So in this example, this was at 11:40, and oops. We were going short. Our target was 953. Let me mark this out on FX Replay. Alright, and we close at 11:40 on this inversion here. And our entry was on the basis of the 1050 inversion closing there. Okay, so we close it there. And then we print an inversion above that. To me, that would definitely be a valid stop out, just because we can hop in the next trade, right? If it occurs. Let me put a position tool on here. So let's say we're going short. Our stop loss would have been there, correct? Yes, we're aiming for 953. So had we not stopped out with that first inversion, this would have been a win. So far 50-50 results. I'm going to take a screenshot of this and also add this to the chart. I'll have to copy the link. Ooh. Manual stop out against us. It was this one, I believe. Nope. Sorry, hold on a second. October 22nd. 2R. I just clicked that one, didn't I? Not that one. That's the 21st. Okay, half stop, this guy. Alright, so I'm just adding the second image to it just so that we have that extra data here. Okay, there we go. Alright, and did we take a look at this one? I don't believe we did. Okay, this is the day before. Just gonna go to that. Okay, and the day before, this was at 11:10, and we closed on this very next one. So right here. So I will mark out 11:10. We entered on this fair value gap here. Long there. Our stop loss would have been here, and we stopped ourselves out manually at this point, so we would have been stopped out. So this would have been a loss had we held. And same thing, I'm just going to take a screenshot of this to add to the data. Let me expand the chart here. Now this is going to be the hardest data point to track or to kind of go through and refine, which is why I started with this one, because it's something that we just took notes on and we didn't track as one of our data points specifically. Once we get through this, the rest of it is going to be fairly easy to get through, but this part is going to be a little bit brutal because we're going to have to go through each example, unless I have it, you know, I have the chart otherwise. Okay, so that is 3 occurrences, and 2 of them we would have lost the trade anyway. We're now here on this rep. Oops. On this rep. And I definitely took notes on every single time. See, so inverse fair value gap prints against us. So I took a note every single time that happened. Alright, so this is October 23rd. Wait, why are we taking this short here? Because of that there, and then we enter. Okay, and it forms an inverse at the same time. Yeah, so this is basically an instant stop out. We're basically break even here, and then I show here that we would have been stopped out anyway had we held. So great, that's a 3rd loss that shows that we definitely should have closed. Inverse occurs. Another inverse printing against us. So see, it happens quite a bit. So we enter on this one here, and again, this is an instance in which we get the entry, it never displaces away from our entry, and then again it closes through. So another loss. Okay, I'm assuming that was that guy. I'm gonna just click this again. Okay, yep, that's the same rep. I need to track this by date maybe. Let me scoot this over. It really depends on you per person, right? Like how much money or how much data do you require before you want to put money on a model? Because sorry, the question was how many instances will you need to create a specific category or an issue, right? To create a specific category and issue. So when you're first starting a backtest, to have a category, you're just gonna use everything that you require in the model, right? So for example, hold on guys, let me just write this down before I get lost here. We left off at October 24th. Okay, so Vinay, to answer your question, going back up to the rules of the model, right? we're looking for an inverse fair value gap to occur late Q2, last 11 minutes to early Q4. So with that, I'm tracking the time that we're taking the entry. All right, so I'm basically tracking it by what the model requires. So the rules of the model create the categories of what you need to track. And then if we see this reoccurring multiple times, I would say if it's occurring at least 30% of the time, it's something to consider to get another category, right? But then, moving on to the other things, we are using a root candle. So we're also tracking what root candles are happening at our entry. And if it's happening as a target, we are also tracking what's when it's a root candle in our target in this category, right? And then we're moving our stop to BE at 1R. So with that, we are tracking what our runners are hitting before they hit BE. So we're tracking, for example, we hit 1R and then the rest of our runners hit BE. We hit 1R, the rest of our runners hit BE. There's only one instance in which we hit 3R and the rest of our runners hit BE. Okay, so these are things where the target is much further than 1R or 2R or 3R, but and thus we are trailing our stops, or we're at least trailing our stops at 1R, and we're taking risk off the table at 1R. And we want to know how far the trade went before the rest of our runners went BE, right? So that's how we're tracking this specific data point right here. And then, of course, we're also tracking how wide our stops are, how wide our TPs are. And yeah, like that's really it, right? So anything that is in the rule set to take a trade, you want to track that initially. Then as you start to have things occur over and over and over again, I would say at least 30%, it's something to consider. So because it's one of the rules that we set to close the trade if a inverse fair value gap, hold on a second, what is this? Okay, this is stuff that we added. Okay, so because it's one of the rules that we set to close a trade if an opposing inverse fair value gap occurs before 1R, I simply put it in the notes and I didn't add a category yet. I would say of the overall trades. So for example, like once we get through all these once we get through all the reps in which that occurred, I'll have a tally of how many reps it happened, right? So for example, we have 60 reps here. So far, I've already gone over 5 trades in which that inverse fair value gap has occurred against us. So I think it happens enough that we already made it a rule, right? We're going to close the trade if an opposing inverse fair value gap occurs before 1R. But if it, so because it's a rule, we can take a note on why we closed. But if it's occurring on, over 30% of these reps, again, let's say just over 20 reps, then I may want to add the reason for a close. So then I'll add a whole nother category and, reason for close or reason for stop out, right? Or reason for a manual close or stop out. So I think, and that really, I think is by ear. I think all backtesting is by ear, really, right? I don't think anyone is saying, okay, like we're gonna consider this at this point, or there's no universal rule to say, okay, we'll consider this data at this point. It's really person to person how that person backtests, right? So like, I think it's enough to consider if it's happening a third of the time, specifically because our win rate is at 60%. So at a third of 60%, that's significant to me. It's happening enough that we can go over that, right? And and the reason why I start backtest so simple is because as these things start to occur and you start to see like different things occur through different reps, if you add too many categories to your backtest, it makes it very what is the word I'm looking for? Unengaging and brutal to test. Like, it just doesn't make it a fun backtest. these, with everything that we've tested so far, this is very, very fast to track. Versus if we add more and more categories, we have to track like 15 things before we can move on to the next rep, right? So I think the less things you have to track, the better, and the more you're bound to get through that back test. Does that answer your question, Vinay? Sweet. All right, so we'll go back to October 24th. No, we don't use SMT for, it's not part of this model specifically. So Walter, I'm not sure if you were here in the beginning of the session, but we basically test all models that we're using, or we're in these backtest sessions, we test the models that we trade as a server. So anything that you're seeing the traders trade live, JD specifically, if you see JD trade it live, these are models that we've tested together. We don't make the backtests complicated at all. We start very foundational. We try to strip the model down to its core, and we backtest it in its most basic form. And again, with that being said, in its most basic form, this model already has a 60% win rate. So we haven't added SMT to it. I don't foresee us ever adding SMT because I don't actually ever see JD use SMT. So I wouldn't add SMT to one of his models, but if we see these things, you know, if we see certain things occur, those are things that we may add in the future. For example, this inversion closing against this happens quite a bit, so that may be something that we may want to add. JD and his original version of this model, he uses 5 and 15 minute PD arrays as entry points or targets. That may be something that we may want to add down the road. And then it's also things like, you know, we can add daily bias to it, right? But no, we're not using SMT for confirmation. SMT tends to be a price-based concept and is not a timed-based concept. Most of the models that we backtest here are, I would say, 80% time-based. All right, so we landed on this one last. I'm sure. Yep. Next one to occur. All right, another inverse forms against us here. Wait a second. Rejecting 10A open before inverse prints against us. Entry occurs 950 to 1010. Here's the 10 a.m. open. I see. Okay. So it rejects it here, and then we finally inverse it here. Okay, so in this instance, this would have been a win had we held it. All right, next one. Inverse prints against us here. This is on October 28th. At what time? 10:08. Alright, so the rep is 953. Oops. Open. Very tiny, small inversion happening right there. And which one did I place the stop loss at? Okay. The lowest swing low. I think it's like a point or two. Yeah, literally 1 point, so there's no reason to be a dick for a tick. and we close on this inversion against us. So right there, we enter the trade on this one here. Okay, and we close there. And we would have won. Where were we targeting? We were targeting midnight open 61425. Alright, and this instance we would have won had we held. I just want to see if more inversions print against us. Okay, yeah, so we have this first one that we closed on. Then we have a second one that would have closed there. And then we have a third one that would have closed there. And of course we inverse in the direction of our trade, or of our TP. So in this instance we would have won, but I would say that this is a really, really hard hold. I'm still going to mark it as such. It would have been a win. But that would, I think this would have psychologically been really, really hard to hold for most of us, I think. And again, I'm just going to take a screenshot to add this to our data so that we can see what would have happened. And I need to add a date really quick. 9:53, or I'll put it at 10:08. That's the next quarter. Yeah, Walter. So I'll share this sheet with you. Give me 1 second here. So we've gone over this model in several backtests before this session. You can go ahead and take a look at the rule set at the top of this sheet to kind of get caught up. If you have any questions, feel free to ask away. But the rules for this model that we're backtesting is at the very top of the sheet, so you'll be able to see what we're going through. What we're doing today is not backtesting the model. We're simply going through the data that we've already backtested for this model. Oh wait, why did it give you that one? Give me 1 second here. Let me go back to this one. It's this sheet here. And I need to open this as a full page. Okay, so we are down to the 28th. Close on that one against us. Alright, close on inverse fair value gap against us. This is on October 29th at 11:15. Go to the next day. Okay. So we entered long from the 1034 and 312 candle. Let me mark out 1034. That'll probably give me my bearing. Alright, and the trade is from this guy, I believe. 11:15. Yes, okay. So we theoretically went long here. That would have been the stop. What were we targeting? 658 at 637. 20,637. Okay. And we close on which inversion against us? That guy right there. So this is another, this trade we would have broken even right away. It pretty much printed immediately. And the rule specifically with closing on an inverse against us is only if that inversion is occurring before 1R, right? Because that's before you've broken even. So the idea with the rule is to preserve capital. So this is another instance in which we would have won the trade had we held. But I will again say that these are all brutal holds, right? I think psychologically speaking, and I can go back to all the wins, but psychologically speaking, this is a really hard hold for someone that's in this trade. Imagine it grinding back and forth live while you're holding this up right up against your entry the entire time, and it comes right back down to 50% of your stop before it starts to expand away, returns to your entry one last time, and then finally hits TP. So in this, I can at a glance I can say that it wasn't ready to expand until the 1150 macro, right? But if you're this is Q3 right here, so 1115 being Q3, theoretically I would say this is probably the best entry if you're doing a market order and you're not placing a limit order mechanically. So let's say you took this entry here, you would have had to endure all of this before it expanded, and I think that's I much prefer to take this trade only, right, instead of taking the trade here and holding through all of this brutalness. Because psychologically speaking, those little wins of getting this clean entry straight to TP, those trades really make a difference in, you know, quote unquote psychology for those who depend so much on it. I'm going to copy this link and also add it to our data set here. This is 29th at 11:15. 17 and a quarter. I did it at 17 and a half. All right, and this is another one that would have won. So far we have, now we're back at 50-50. So 4 trades would have won if we continue to held, and 4 trades would have lost had we continued to hold. New inverse fair value gap during Q3 towards 1034, closed on inverse against us, and this was nested with 1034. Okay, so see, this is way beyond 1R. So this is an instance and like we executed it properly, right? So or we technically didn't need to close it here, but we chose to close it here because it was nested with 1034. So what I'm saying is the rule is we close the trade no matter what before 1R. But because this is beyond 1R, we're already break even. Risk is already off the table. But what was the signal was that it was nested with 1034. So let's just see how that would have panned out. Now, mind you that for all the trades that we would have lost anyway, these are trades that we could have these are new trades we could have taken. So just like either we get to this inversion or this inversion print and we simply just reverse the trade, or we close the trade and wait for this new inversion to play out. Once this inversion plays out, then, you know, we can either let that trade go and then we just wait for the next opportunity, right? So again, let's just take a look at this to make sure this looks good. This is October 29th. I'm going to delete everything. Probably lose some data for our most recent reps. This was on October 30th at 10:30. Okay. So that would have occurred there, I believe. And Q4 is 10:08. 10:30 is a new 90-minute cycle. Then we have 10:53, which is Q2. 11:15, which would be Q3. $10.34 is here, the open. Okay, so see, we closed, let's again live, right? Let's say we're live and we're watching this. Instead of choosing to hold this, we say, okay, we're gonna just reverse the position and take it, right? And we apply the same tactic. We have a inversion nested with our root candle. We place our stop loss at the swing high, and we're targeting the very first time base level that occurs. So let's find 953, which is here, right? So let's just say we're aiming for that. If we were aiming for that 953 price, we would have hit 1R a long time ago. And upon hitting that 1R, we would have trailed our stop to BE. So right when we hit this point there, we trail our stops to BE. I'm sure we would have hit 2R. If I can grab it again. I'll pull up 2 and 3. We hit 4. Okay, so yeah. I mean, I'm pretty sure a lot of us would have exited by then, and I'll just pull out 953's whole candle. See, like, it comes and it misses it, but it gets right up to it. So again, just choosing to close it on there, and then it's, you know, bouncing, and then finally this places away from 1034. You have basically another opportunity to try. You have this many opportunities to hop into this next trade. I don't know, what's that, like 15 minutes probably, right? 10:30 to 10, yeah, 15 minutes that you could have decided I'm gonna hop in this trade. 10 minutes because 10:34. So 10 minutes of this grinding right here. It's not displacing up. We're staying below the inversion for the most part, aside from this one close above it. So you have 10 minutes to say, okay, I'm just gonna short this instead. You take the short. You would have trailed BE there. You would have gone to 2R, 3R, 4R. By that time, I mean, I would hope that everyone would have closed. Let's say worst case scenario, you decided to hold this until an inversion prints against you again. You would have at least locked in 1R at a minimum. Let's say you held this all the way back up to here, and on this close you decided to finally close it. You would have at least locked in another 1R just with that alone, which is exactly what the model is. So okay, long-winded way of saying this worked in our favor to close this trade, although I don't think we would have lost this completely. Okay, our stop loss was at this swing low here, and our original target was midnight open at 729.50. Let me close that guy. So let's just pull this out. Okay, so we would have lost. Our stop loss would have been there for the original trade, not for the one that we could have theoretically hopped in. But the original trade was probably this to this, I believe. 20-point stop, 36-point stop. It was this inversion. Oh, nested with 953. So here. Okay, and we were aiming for 729.50. Alright, so again, had we decided to close, we would have lost that trade. Instead of just hopping into the next opportunity. We locked in 3R on this trade. We could have locked in another 3R, just reversing the position. So I will add this. This is October 30th. Yes, this rep right here. All right. 1 second. So that would have been the trade we would have lost. So that's 5 for the losers and 4 for the winners. I'm going to pause here. Do you guys have any questions? Awesome. No questions. Inverse was nested. Okay, another instance here. This is November 5th. Gosh, I hate this pop-up menu. Okay, we'll highlight that. Okay, and we close on this inverse. So some reps I was playing it out and some reps I wasn't. So this one we would have won. It makes it a lot easier when I play it out. I have to remember that. Second inverse against bias. Okay, so we apparently held. Another instance of this happening was when it's basically like this: when the inverse is occurring against us within our stop loss. And I remember this exact conversation with us, but this inversion is closing against us while we're already within our stop loss, right? We've already put our stop loss on. We're already in the trade, but since we're already in drawdown, I mean, we were saying, do we just close the trade, you know, halfway in drawdown, or do we just let it play out? I'm the type of person that if I've already accepted the risk on the trade, I'm just going to let it play out, right? Like, I'm going to take that full stop, or I'm going to take full TP. The consensus with the group that was here for this specific rep, we all decided that we would have let it play out, right? Being that we were already in drawdown anyway. So since we were already in drawdown, we let the trade go, and then a second inversion prints against us. So see, I show here we would have lost the trade anyway had we held. It would have even been theoretically better to just close on this first inversion just to preserve whatever capital that we had left. But right after that inversion printed against us, we had another inversion print for us with the direction of our trade, and then again right back up through that inversion. And you know, this is an example of why 1 minute models specifically are pretty hard on you know, again, quote unquote psychology, because you have especially for like an inversion, you have so many inversions printing against you. But notice the time of when these inversions against us are happening. They're all happening during Q4. The best time to take an inversion is really just between Q3, right? But we let it happen as early as late Q2 and all the way into early Q4. So this first one is problematic for us, which, you know, again, shows here we could have just closed it anyway. But then still in Q4, and this is probably like exactly halfway through, we have this inversion again printing in the direction of our trade anyway. So that just, you know, I'm a fan personally of the 5 minute time frame. So if you this is an example of like where your higher time frame bias would have helped significantly into either just not taking this trade against price action that's going up. This specific fractal, I think we had a rep before this that worked out great, but this specific fractal of how price is printing is pretty much your classic Q3 inversion that you're looking for. So you have LR being built up, price comes all the way down into the extreme of the 90-minute cycle. So this is Q1 all the way through Q4, and this low is at the very lowest low of the 90-minute cycle that has played out up until this point, right? This is the first low that occurs. We create another low, a third low, and we take out all three of them, and we create another new low, and then we have that inversion. This is like the classic inversion that you want to see, plus it's nested with your 953 and 1034 candles, and then you have expansion into this low resistance liquidity. All right, so this is exactly the type of run that you're looking for. So with this expansion that's happening, I don't actually look for a reversal to take out all this price action, that this run that went up. I would actually look for a continuation in Q4 technically, but just applying the model mechanically and just following the rules and taking it win or loss regardless of bias, regardless of higher time frame analysis, you know, very mechanically, again, the model is still hitting at a 60% win rate. So there was reason to take this trade, basically, long story short. So I already tracked that as a loss. We are now on November 5th. Okay, close on. So we were on this one here. Oops. I hate that pop-out menu. Oh my gosh. There we go. All right, so I didn't take any notes on all these. These we were apparently just stopped out straight up, and then nested, and then we have one more rep in which we closed on the fair value gap against this. Okay, this is on November 12th, so this should be at the end of our data here. November 12th at 10:08. Okay, so we basically just aimed for 1R, it looks like. So we were long here. We targeted 1R with the stop loss all the way at the swing low. 40 points up. And we close on this inversion against this right here. I shall play this out. So a second inversion is printing against this there. And again, another brutal hold. Okay, so we would have gotten that full stop out. So this would have been a loss. We'll add this. All right, so very simple, you know, not simple, but and it obviously gets brutal as you go through more reps. This is why you go through your data or your preliminary data before you start to get into a really extensive back test. The reason I went through 60 reps before doing our first refinement is because we're taking as many reps as possible in one day. So as long as it's happening during that time window, with the 953 and 1034 root candles, we can take as many trades as we want. And there's some trades where 5 reps are being printed. There's some days where only 2, 1, but there are quite a few days where there's at least 4 or 5 reps that are occurring. So instead of capping it at 20 reps, which would only have been about 1 week of testing, we were able to get at least about 1 month of data on this one model, taking multiple reps per day before we did our first refinement, which I think is pretty reasonable. Okay, so of our 60 reps, we have 11 instances in which this inverse is causing us to close our trades, and that is this inverse is printing before 1R. We did go through one rep where that inverse was occurring after 1R. So technically only 10 reps were occurring before 1R. So that's only 12% of the trades that we're taking. So it's not that big of an issue, I think, to close with that inverse against this. So I do think it's actually, I think it's technically helping more than it's harming. But of those 10 reps, let's just assume that the one, that one rep that was above 3R was a loser had we held it. So technically this is a 50% win rate rule, meaning 50% of those trades would win and 50% of those trades would lose had we continued to hold those. Now, one thing I want to look at with those specific reps that I should have done while I was going through them is I want to see how much we won with those reps, like closing them on that actual inversion. So we got 1R with 1. We got a full stop with 1. Give me 1 second. Full stop, 1R. I'm going to assume BE. Okay, so apologies. 1R. Can I just, is it possible? Yes, it is. Okay. 1R, full stop. And this is all, again, this is all just with a very, very simple tally. All right, so this we would have, this we were in profit. With that close, this we were BE. 1R. One R. I missed one. 1R. No, full stop. Hold a second. I missed 3. Oh, this one there. Full stop. Okay, 1, 2, 3, 4, 5. Okay. Let me start from the bottom. 1. 2. This is profit. That's also profit. Okay, that's the one I was missing. We have one more. Nope. That's a full stop. 4. Okay, there we go. Alright, great. So now that this sheds new light. Okay, so going through the ones that we did collect 1R on and the ones that we collected BE or profit. So we do have only 4 trades that took a full stop out of those. So meaning where we closed them with that inversion, we technically took a full stop, meaning we didn't take any profit off the table. So that rule is helping to have it there. So even though let's say that rule didn't exist altogether and we held past that inversion, we just simply ignored it and we just held the trade, 5 would have won, 5 would have lost. But implementing that rule, we had 6 trades that won and only 4 trades that took a loss. So that also technically has a 60% win rate with it in place. With it not in place, it has a 50% win rate. Does that make sense to everyone? Is everyone following what I just said there? So I think that personally, I think that's worth keeping. I think maybe though I will have to add that reason for closing. I'll just have to think about it more, and we can, as we go through the data, I'll even see if it's more significant than anything else that occurs. Now, one thing I want to look at is the full stops, just all the losses all together, and I want to look at the average time. So I want to sort this by time here. So most of our trades, let me do a range. So we have a 25-point rule, yeah, 1 to 26. And then let me do the median, with 4 being the median. Okay, so most of our trades are being stopped out in less than 10 minutes. And then there's very few trades that are being stopped out longer than that. So anything that we're holding longer than 10 minutes generally hits profit. Now we can confirm this with going to the full profits, right? But when we take a stop loss, when we take a loss basically, we are generally taking that loss within 10 minutes. This is good information to know. Why? Because if your trade is in profit after 10 minutes, that is 60% more likely to win, right? Because of what we see here, where most of our trades that are being stopped out are stopped out before 10 minutes. So then let's go to our full profits to also do the same thing. So I'll just sort this. And in this case, let's just also pull up the median. 12 minutes here. So see that already tracks, right? Like 1, 2, 3, 4, 5. Wait, 1, 2, 3, 4, 5, 6, 7, 8. I'll count the 10s. 9, 10. 10 trades out of 24 wins. Oh, that's technically half of them. If I remove the 10, that's 8. So that's about a third of the trades. Okay, yeah, a third of the trades, 30%. So you're 60% or 70% more than likely to win if the trade is literally lasting longer than 10 minutes. Does everyone see how that data, how I'm able to decipher that based on what I'm seeing here? I just want to make sure everyone's tracking. If anyone can just throw me a yes, I'm following, that'd be great. I'd appreciate it. And I'm just gonna make sure I'm scrolling down. Yes, okay. Yeah, so is everyone following how I'm able to decipher that? It's very, very simple, right? I'm literally looking at the duration. Most of the losses are occurring less than 10 minutes. Most of the wins here are occurring 10 minutes and over. Sweet. Thank you so much, Swag. Okay. So, wins over 10. %, or 70% technically. Okay. Now, let's go to the roots and see what we can decipher. I remember going through this with you guys before, and there wasn't much. So 953 is the most used root candle technically, right? In which it has the most reps applied to that. But most of the reps that we actually took were actually not nested with a root candle at all. So this is what I want to see in here, in these reps specifically. So, oh, it's equal. Basically, we have 40% of these trades not nested with a root candle, taking a loss. We have 36% of them, you know, still less, but it's there. 36% of them are hitting TP, and the remainder 3% are hitting BE. Yeah, 60% win rate with less than 2R. So it is profitable because you would be at 1R. 1R is profitable or break even at 50%. Okay, so I haven't tracked the R specifically, but every single trade is over 1R. I just tracked the stop loss and the TP. For example, we can do a rough estimate, right? We did this before already, but right here our average stop loss is 22 points. Our average TP is 44 points. So this is technically a 2R model, right? Even though our target, we're only aiming for 1R. Does that make sense? But our on average, our stop loss is 22, and this isn't for every single rep, right? You can see like this one, our stop loss was 11 points, but our TP was 29 points, well over 2R. Same thing up for the rep above that, same thing for the rep above that, and you know, so forth and so forth. But there are reps where like this is barely over 1R. This is basically 1R. This is basically 1R, right? So on average, through all 60 reps, this is a 2R model. Just for where, because all of our targets are time-based models. But where we're aiming for as targets, for these time-based targets, they are generally over 1R. And we just require at least a 1R for us to even target that. And I showed an example of Alter probably before you hopped in. But let's say the very first winning trade that I pulled up here. See here, this is a 1.3R, right? So the first time-based level technically in this model would have been the 658 root candle. This was less than 1R for the target, so we decided to extend our target to New York Open instead, which is, so again, over 1R, right? So because we're targeting a time-based level over 1R, we require at least that, but most of the time you're yielding much more than that. Okay, so back to what I was saying for the root candles here. Of the 30 reps that were not 100% nested with a root candle, it's pretty equal with, you know, we technically are taking more losses, so this may be the next refinement. And this is a really I think this is gonna be a hard one to do. Let's pull up a winning trade so I can show you. Oh, that's probably not a good example because this one was messy. Okay, these are nested with root candles though. Okay, no. This is a good example. Okay, so let's just say these are 953 and 1034 root candles, right? Even though they're down here. Let's just say they are. Let's pretend. It's not 1110 and 1121. And we have this inversion occurring right above the 953 candle, right? Because it's not overlapping, but the 953 candle is creating the low of that fair value gap. So although it is adding confluence in which this 953 candle is creating the swing low, it is not overlapping. So if we created that as a rule in which we are only taking trades in which they're fully nested, then we would skip trades like this, in which, you know, it's a part of you know, I don't know, it's a part of the inversion technically, because it creates the low of that inversion, but it's not overlapping that inversion. And I think that's a hard pill to swallow for everyone trading this model. Is like, okay, we're not going to touch it because it's not overlapping. And, you know, you guys can correct me if you disagree with that. But I do think for those who don't execute the model as such, or those who are good at sitting on their hands, that's a really simple rule to apply. So this is a good example. This is a clear example right here. We have 953 creating the swing low, just like I mentioned, you know, if we were pretending in the last rep. 953 creates the swing low here, and the inversion is above that. So although this adds confluence, why? Because 953 is rebalancing a fair value gap, is creating a swing low that is holding. We retest it and expand away from it, and that inversion is now closed, right? So this is a rep. This is another example in which if we remove all the reps that were not completely nested with the fair value gap, meaning they're not overlapping directly, then we would not be able to take trades like this. Would anyone like to comment on this? Like, for those of you who do trade this model, would you be okay with removing this sort of rep, with not taking an inversion just because it's not touching a root candle, it's not overlapping with it? For me personally, I don't think it's necessary, because I think it requires too much discipline on the trader's end. But then I need a little bit more. Yeah, it is additional confluence. Exactly. Okay, great. Hey, Cozy. Thanks for joining. I 100% agree that it's an additional confluence, because that's just like, this is a clean trade to me. This is a really, really clean rep. And mind you, I didn't cherry pick this one technically. So JB, that is not a part of our rule, or that's not a part of the model specifically, right? So although that adds confluence to the model, a sweep of a short-term low is not part of the model. No worries. But thank you for chiming in altogether. No worries. Yeah, so JB, let me just if you scroll up a couple of messages, I actually sent the notion. It's gonna be this one right here. I'll reply it to you, since I see that you have the lab tech role if you're interested in this backtest. So this link right here will link you to this exact page of where all of our reps are occurring. I'm in the tables right now, so I'm kind of stepping into like the more refined data. But basically, I have stripped down Q3 inversions and root candles to a very basic form. The rule set is at the very top of the sheet, and you can kind of see what we're testing specifically. And we're not adding anything else to it. It's very, very simple. We simply take an inversion at a specific time with the root candles. We place our stop loss at the swing high or swing low. We TP at a time-based level, anything over 1R. Okay? So without adding SMT, without adding intermediate, without even adding market structure. Thank you, JB. I appreciate that. Without adding market structure, without adding 5 and 15-minute PD arrays, without adding daily bias, this is our preliminary test, our first 60 reps on this test. So what we're doing right now together as a group is we're going through all the data to see how we can refine the model just within the first 60 reps. All right, so again, with those 30 reps, it's kind of even. 40% of them lose, 36% of them win, and the remainder, 3% of them basically break even. I don't have the R pulled up on that. We'll look at the partials in a second for all the ones that might have broken even. But, I think for 40-40, basically, I think this is solid to stay in that it does add confluence to the model. So, again, of the models or of the root candles so far, with the ones that are nested with fair value gaps, 953 seems to be the most used, which makes sense. There's only 6 instances with 1110, and there's only 7 instances with 1034, and this is with the root candles being confluence for the entry. These are not the root candles as targets. Okay, now let's look at, with this being said, like we're looking at 1034, right? 3 of these 7 reps take full stops. So that's about 50% of the trades in which a fair value gap is nested with 1034 is taking a full stop. And let's just pull this up really quick. Okay, so see how, where it's literally on 1034 root candle. Okay, so if we take this trade, we would have taken a full stop. So that's something to consider with 1034. It's not as strong. You only have one instance and one is taking a full TP. Oops, I almost undid my data. And then you have another instance in which it's taking a full break even. Again, I don't have the R pulled up on here. Let me see if this is not too hard to do. I think I should be good. Runners BE. Okay. Let me pull this up to here. Okay, so and the remainder 2 reps that were nothing, they did hit 1R. So you only have, so you have 3 reps taking a full loss and 3 reps that are keeping money in your pocket. But you only have 2 of them that you took partials on and 1 full TP. Let's go up to 953 and see if this yields anything different. So of 953, significant difference. 53% of them are taking a full TP. Right, and then 1, 2, 3. Let me see if I can get a percentage out of this too. Percentage not empty. So you have 17%, an additional 17%, again, in which you've taken partials off the table and you remove risk. Once we take partials in this server, we break even at the same time. That is something that we all learned from JD. I'll repeat that. If you are taking money off the table, you are also removing risk from the trade. Meaning, if you are taking a partial, you are trailing your stop to break even because there's no reason to give money back. Okay, so 17% of the time we take money off the table, remove risk. 53% of the time we are taking a full TP. 35% of the time we are taking a full stop. So as a confluence, 953 is much, much stronger than 1034. So it almost gives you the argument of like not even using the 1034 candle as an entry. Again, you know, this may be something that we add as a rule. Maybe we just test 953 exclusively, or not, you know. But again, there's a lot of, we have, most of our reps are actually occurring. This is technically half of our reps are occurring in which the inversion is not necessarily touching that root candle. All right, so I think that's good for that. Let me just write this down. So 953 over 1034 at 1110. Wow, 1110 is actually not doing that bad. Half of the reps hit full TP. Only one rep hits full stop. And then what we have, one break even and one hitting 1R. 1110 is actually not that bad to take a trade from. It's even performing better technically than 1034. All right, so now let's move on to partials. Let's see if I can gather anything from this. Again, I will start with duration. Okay, so this is interesting because this is showing us the same exact thing as our TP data did. Our full TP is that you will more than likely hit TP if your trade is lasting more than 10 minutes. So most of our trades here in this 11 reps, only 4 reps are under 10 minutes. So that's about 60% of these trades are also over 10 minutes. See, so the data seems to be consistent across every single way we've broken it down so far. Now let's look at the target. I added this table last time, and I didn't get to dive into this. So let's look at the targets as to see which one has the most successful win rate so far. So I'm gonna go with percent checked. All right, 42% winning for 1034. You have 1110, 50%. 1R as a target. It was just when we use 1R as a target, it's because there's no time-based levels or within the vicinity, meaning that's like 300 points away. So like, who's gonna actually hold for 300 points from, like, I don't know, we have a 17.5 point stop, right? Like, are you gonna hold for all 300? Are you gonna actually target 300 points? Cozy might be the only exception in here. Yeah, Cozy is gonna be the only exception. Which, like, she's gonna target 300 points. I personally probably would not. You know, like, I'm great at holding, I think, but probably not gonna target 300 from 17. Okay, so 312. Look at this. 312 has a, oh wait, I don't have this. What am I doing? I have the full stop checked. I don't have the full win rate checked. Hold on a second. Oh man. Okay, so okay, 14%. Okay. All right, so 100% of the trades, only 3, which make up for a 0.5% of the trades of the reps, but every single trade in which we targeted 312, full TP, 100% of them. Right, now let's take a look at this to see if we can dive into this a little bit more. Let me see if I can add. I will. 1 second. I will add the root candles. Okay. And let me just move those root candles up to the target. Alright, so from those, wow, look at that. From the 953 root candle, right? And look at the note, 953 root candle, and the one that says NA. From the 953 root candle, 312 is hitting 100% of the time. Again, albeit only 3 reps, okay? So only 0.5% of the reps that we've taken so far. Am I calculating that right? Maybe 5%. Sorry, 5% of the reps we've taken so far. Every single time you target 312 from 953, it's hitting. So 953 creates a swing low for stop loss. So this is the rep that we actually all looked at together, in which the inversion is above 953, but 953 is creating that swing low. We target 312. It's basically 100% win rate. So you guys keep that in mind. Let's keep moving through this. full stop, 33%. Yeah, thank you. I think so too. I think that's really good because then I'll just be like, all right, if it's 953 is not in the vicinity, I just won't take it from 312 from 953. All right, so here, what is this? Our target in this case, okay, so this is 90-minute cycle highs and lows in which you're just targeting the extremes between Q1 and Q4. And I remember these reps because, you know, we had just so many nested inversions happening in those. But basically, if we're using those as a target, it's 50-50. So you have 40% of the time that you are winning and 50% of the time that you're hitting a stop loss. It looks like to me, I don't see the runner's BE. No, you're not. Okay, yeah. So then you only have one trade that actually hit BE. So that's, I guess that's the remaining 10%. Yeah, this is 10 reps. So 5 reps hit full stop. So this is basically 50-50. But you have, if you're targeting that 90-minute cycle high and low. So this technically, although it's a little bit low, only just a little bit lower, is not as strong as a target as, you know, another root candle or anything else. It looks like 1110 also seems to be performing at 50-50. And let's go down some more. This target is for 953. Okay, so for 953 you have, wow, okay, so for 953, you, as a target, you only have a 35% win rate. Let's add the percent in which we took profit off the table. Okay, but, oh wait, that's empty. Not empty. Okay, so you have 30%, basically 29%, 28%. Where you're taking profit off the table. So a quarter of the time you're taking profit off the table but removing risk, so you're not losing money. And then 35% in which you're taking money completely, you're getting a full reward. And then another, the equal quarter percent. Wow, that is actually equal, an equal quarter percent in which you're getting a full stop. So 953 as a target, not great, but as an entry, pretty much excellent. And notice that when we use 953 as a target, most of the time our entry is not another root candle. It's something that's above or below. And then this is daily open. So 6 p.m. open, 100% loss. Not a good target as well. And then monthly open, 50-50. Okay, so great. I think we got some good data here. 1 second. I just want to recap everything that I did, or everything that I said on this page. I think I'm just, the real takeaway for me from this, oh, in the 90-minute cycles. 1110 was also 50%. The main takeaway for me on this is that 312 is a great target. 953 is not a great target. Everything else is about 50-50. Yeah, okay. All right, you guys get, if you guys have questions, please feel free to ask them. We are going to take a quick 2-minute break. I'm going to step away for 1 second, and then I'm going to come back and give you guys the full summary of all the data that we just reviewed together. All right, so of all the data that we've reviewed together in this session, the basic summary comes down to this. Of the rule to close trades if an opposing inverse fair value gap occurs against us, this rule, if we choose to ignore it, would yield a 50% win rate and a 50% loss rate. So if you chose to just ignore that rule altogether, 50% of your trades would have won, 50% of those trades would have lost. Since we implemented those rules in our trades, 40% of our trades lost, and 60% of those trades won. So that rule does seem to be working for us, but this criteria or this phenomenon is only occurring in 12% of the reps that we've collected so far. So of the 60 reps that we've gone through, it only happened in 10 of them. So it did seem like it was happening a lot while we were testing it, but in hindsight, or reviewing it in hindsight, we now know that it was only actually occurring 12% of the time. So I do think this rule is solid enough to stay in place, being that it is actually helping us keep more money than lose it. One thing that we learned as well is that we are taking losses within 10 minutes. 60% of our losses were occurring before 10 minutes. If you held your trades for longer than 10 minutes, 60% of our wins were longer than 10 minutes as well. And if anyone has questions about that, I can always pull that up. But it was basically just toggling the duration of the trades. We could see that most of our losers were less than 10 minutes. I believe it was, something roughly like, of 11 trades, like 7 of them were losers, right? And then for the trades in which we won, I think it was like maybe 4 to 5 reps that were losers, and they were all less than 10 minutes, and everything that won was over 10 minutes. So again, losses occurring within 10 minutes, wins are generally over 10 minutes. How can you utilize this in live markets? Well, if your trade is in profit after 10 minutes, that trade has a 60% chance of winning. So that should give you the conviction to continue to hold, even if it's chopping. So even if it's grinding towards your target, as if it's been over 10 minutes and you're in profit, you're more than likely to win that trade. Next up, we learned that 953 as an entry and as a confluence for the entry is much, much stronger than 1034. 1034 is almost negligible in adding confluence to our entries. We learned that 312 is a great target coming from 953, and 953 basically shouldn't be used as a target at all, or it acts very poorly as a target. And then almost every single other target that we're utilizing, being the other root candles or the quarterly cycle highs and lows, those basically have a 50% win rate. What seems to be falling to the wayside are all the ICT based targets, I hate to say. So things like the weekly open, the daily open, the monthly open. I'll just show you the list of targets that we have, because we just basically added everything that we use, right? So TDO, NYO, this is a quarterly cycle thing, but this is quarterly cycle. That LR, I don't think we've even used. We can probably remove that. London open, 953, 1034, 1R weekly open, NWOG daily open, previous month high, monthly open. All of these things, these basic, they're really just higher time frame base levels, but these just don't seem to be occurring enough, or they're not even worth targeting. What seems to be more frequent targets and solid targets are all of those targets that we're using. These are the time-based levels that are already there on our charts with the quarterly cycle indicator, if that makes sense. So that's basically it, guys. That's the summary. So again, quick recap. We use midnight plenty of times. So, but it just is not occurring. So every time we use midnight open, those trades, are there. So 1, 2, 3, 4. 4 times we use midnight open. 1 loss, 1 win, second loss, second win. So 50-50. So that's another level in which is 50-50. But again, the targets that we mainly seem to be using are the 90-minute quarterly cycle targets. And those seem to be stronger. Alright, so any questions? Does that summary make sense to everyone? So again, the inverse rule against us, that seems to be solid to close the trade. Your losses are going to occur within 10 minutes. Your wins are going to occur over 10 minutes. 953 as a confluence is much stronger than 1034. 312 as a target is basically 100% win rate. 953 almost should not be used as a target at all. And then every other root candle or quarterly cycle target time-based level are about 50-50 as far as win rate goes. And again, with where the model stands so far, we are getting full profit 40% of the time, and then the additional 20% of the time we are removing risk and taking partials. So overall we have a 60% win rate, but only in which 40% we're taking the full TP. And that includes the losing streak that occurred here. Now this losing streak simply occurred because of all the nested fair value gaps. Okay, and I will show you. So I'll pull up just this one chart here. Right, so in this one example we have 1, 2, 3 nested fair value gaps. This is obviously a win, right? I'll go to the next one. So see, we have this here, or sorry, we have this one, and then we have another one down here, right? So the trade that we took is the one that was nested with 953, but it got up to here. It actually this is when it's trading away from midnight right here. It got up to 312 and then traded back down into our stop loss. And then as we go through those reps, they start to we just keep printing over all these inversions that we already printed in the previous reps, and it just gets nasty and nasty. So I think the next definitive rule that we should add is that if there's several nested inversions and it's just not clear which direction, like there was already a rule that was kind of unspoken, but if we are, let's say if we're entering on an inversion and on the way to our entry another inversion prints, we were simply removing that limit order, right? Because this backtest is not a market order backtest. I never actually backtest a market order type of trade or type of strategy. I only backtest limit order models, right? And that's something that's kind of really just based on me and my personality, because I don't think anyone personally should be taking, and JD is obviously the exception. He's been trading much, much longer, and these are his models, and he does this live in front of us every single day. But I don't think anyone who's been trading less than 4 years, I'd say, should be executing with market orders. Again, unless you're like profitable and you're not new to this and you've done extensive backtesting, you've done extensive studying. I don't think anyone should be going in and just be going off the whims, right? You should have a model that you have data on. You should have a model that you've tested, that you've traded, and you should be entering with limit orders, because it should be a planned trade. It shouldn't be something that's just like, oh, price is going up, I'm going to hop in. Price is going down, I'm going to hop in, right? So that's why I like to backtest this way. So with that being said, when we have an inversion that we're entering on and another inversion is printed on the way to our entry, we simply remove that limit order, right? The rule that I'm suggesting here is that if there are several nested inversion fair value gaps, and one is printing bullish, one is printing bearish, again is printing bullish, again is printing bearish, you simply sit on your hands. And I think with this losing streak specifically in the last 3 or 4 days, that seems, I mean, that's logical either way, because when you have that many, I would say anything over 3 nested inversions, it's just cause to just sit and wait for a clear direction. Or like when you have LR in a clear direction, things like that. That would greatly add confluence. Now, I want to take it to you guys. Is there anything that you see JD trade live with this specific model that you feel is absolutely necessary for us to pull into the next stages of this backtest? Before these 3 or 4 days of losing streaks, we were actually hovering around a 70% win rate, in which 50% of the trades were taking a full TP, and 20% we were taking partials at 1R and removing risk. So we were actually 10% higher than these, than the last couple of days. But with that being said, once we implement this rule of not taking a trade when there's several nested inversions, that would eliminate that loss rate anyway. But yeah, I open the floor now up to you guys if you guys have any comments or questions, and again, if you guys have any suggestions on what we should move forward with in the next stage of testing. So the new rule that I'm going to add here is that we're just not going to take any trade if 3 or more inversions have printed. And I want to check one more thing too. Okay, yeah, so these are the same thing. Yeah, he does use premium and discount. I think you mentioned that last session, Vinay. If we use premium and discount, then we would have to quantify that to make it mechanical. So is it going to be premium and discount of the price leg, or is it going to be premium and discount of the 90-minute cycle? Because what he's actually using most of the time as premium and discount is the root candle itself. Does that make sense? So if there's a, like for example here in this trade, a premium and discount just means that 953 is the equilibrium, and he's not going to take a short below that, and he's not going to take a long above that. And in this instance, this would not be a trade because of that. And then again, if we are using bias as well, we would also have to come up with a way to quantify bias, in which we can say like, okay, the last hourly candle closed bullish, so or the last 90-minute cycle closed bullish, so we're bullish for this 90-minute cycle. Or we simply say, okay, we can take premium and discount of the range as it prints. As long as we're above, we are, bullish. As long as we're below, we're bearish. But we would just have to come up with mechanical ways to determine these things in order for them to be duplicated by anyone in a very mechanical way, because again, for the purpose of data. Right, yeah. So I think that, for the most part, with most backtests, or with most models even, I think a lot of us actually trade discretionary, but we like to say we trade mechanically, right? But technically, If it's not black and white, if it's not yes or no, if this then that, then you're not trading mechanically, and thus it's harder to track the data as that. When he presented Q3 originally, TMSO acts as EQ of the entire cycle. But then, we add root candles to the mix, and then he also uses root candles as that premium discount as well. So that's also acting as his EQ. And then it's also like, okay, where is midnight in relation to 953 most of the time, right? So right, exactly. So if I'm 100% down with adding these things. I don't think a lot of you are chiming in on what you think we should add. I think at its foundation, honestly, it's solid. I think we can keep testing it as it is, and it's going to be fairly solid. But if you guys are all having very strong feelings about adding certain things, we can go ahead and add them. And again, I'm gonna follow the data anyway. We can add it for shits and giggles, and we can backtest it and see where it lands us. If it proves to be profitable, we keep it in there. If it doesn't, we remove it, right? And it's that simple. Like it's not time wasted. We're still getting the reps in. We're all still seeing the examples together. So either way, it's gonna be time under our belts that we've gained experience with this model. So it's really up to you guys. This is a group activity. I'm not here to like say this is the right way or the wrong way. I'm just kind of, again, we threw this model together as a group. Like we decided, okay, we want to test Q3 inversions with root candles. What are we defining as late Q2 and early Q4? What are we doing as our stop loss? When do we want to move to BE? And this was all decided by the group that was here that day. All right, well, I encourage all of you guys to sleep on it. If we can decide even before the next backtest session if there's anything that we want to add. I think for now, since there's not a strong consensus to add anything, we can basically just play it by ear for the next session. And I think it's good to leave it as it is. I already did add the rule of just, not taking a trade if there's 3 or more inversions that are printing in contradiction to one another. All the rules that we have in place, I think, are fairly solid. I also don't think we need to make any adjustments to the sheet, being that the inversion is only occurring about 12% of the time against us. Again, I think it's just really, really good. And for the losses that we did endure, that rule of not trading if there's 3 or more inverses, that would eliminate those losses essentially. So on Saturday, we will backtest together. Again, we will continue to backtest this model, and we'll go into more depths. And I'll even shoot this over to JD and see if he has any ideas of how we can maybe apply bias or apply premium discount in a mechanical way. I haven't watched any of his 2025 lessons, to be honest with you. So maybe I'll give those a watch before our Saturday session, and then I'll have some ideas on how we can implement these things into this model for sure. But again, I think for a very basic foundational model that's not using any bias, that's not using any higher time frame, I think it's honestly solid. And I think that's really, really rare to find for a 1 minute model. No problem, Kona. Hey, whenever you got your mic working, make sure you schedule another session with me, please, so that we can get you on a roll. Yeah, I'm 100% with you, Cozy. Are you saying as a means for bias, or? Yeah, for me, yeah, I'm 100% with you. I do think, I don't know for sure. I haven't actually been in the live stream with you guys in a while. But for me, I literally only use previous day high and lows and EQs as my bias, 100%. If we're above EQ, like that's just me. So I mean that's easy to do. If we closed over previous day high, we're bullish. If we closed over previous day low, we're bearish, right? If we've swept it and come back, opposite, you know. So that's something that's really, really easy to implement. But I will say that for 90-minute cycles specifically, sometimes the previous day high and low is a little bit like far-fetched is the best word I can come up with, right? Because you and I are probably targeting daily ranges, but these 90-minute cycles are kind of just like flavor of the hour, you know what I mean? But no, I'm you know me, I'm 100% with you. But yeah, okay guys, all right, so we will all sleep on it and we will all reconvene on Saturday and decide maybe what we want to implement. And I think, you know, if you guys really do want to add a bias, we definitely have a mechanical way that we can implement bias. It's really simple. Using the daily expansion at least. My pleasure. Thank you, Cozy. Thank you guys all for being here. I really appreciate your time. I hope that you got some value out of today's session. I think honestly the data was pretty straightforward, and it was very consistent with going through all the data sets. You know, it literally going from full stops to full TPs to partials. All of the data was consistent with one another. No worries. Yep, it will be recorded. Everything will be recorded moving forward. Yeah, John. So these will all be posted to my channel, to my YouTube channel. I will share the link directly with you guys. If you need access to the sheet specifically, I post it quite often. I will share the sheet with you right now again. That way you have access to the data yourself. And as we update the sheet, this data sheet will also be updated, so you'll have, you know, this full thing. But once I post a video to my YouTube channel, I'll post it in my channel within the server, and then you guys will be able to watch this over if you guys want. Beautiful, Kona. Alright guys, I'm out of here. Have a good night. I will see you guys on Saturday at 12 p.m. Eastern Standard Time. Cheers.